Last month, the S&P 500 recorded its strongest May performance since 1990, following the market fallout from Liberation Day. Today, I have multi-asset portfolio manager Sunil with me to discuss some of the key themes that have been dominating the headlines last month. So Sunil, if you had to summarize the market into three key themes, what would they be?
Well, all pretty US-centric this month. I think US headlines caught our attention at the start of the month and at the end, and probably for most of the middle as well. So to pick out three, the first one is you can't get away from tariffs, but we learned a new term this month, which is the taco trade. So if you want to know a little bit more about that and why that's been driving market strength, then watch on. We also had some data releases from the economy and companies just showing how they're reacting to all this uncertainty. And then lastly, at the end of the month, we learned a bit more about the plans for the US government's budget, which led investors to display a bit of caution, I think, about financial sustainability for the US government.
Right, so if we dive straight into that first point there. So we've been hearing a lot more about this full letter acronym, like you mentioned, and it's the TACO, or the taco trade. And in fact, it was one of the most Googled searches last week. So could you tell us a bit more about the taco trade? And pardon the pun, but can markets keep feasting on it?
Well, it was definitely the meme of the month, wasn't it? So TACO is short for Trump always chickens out. It was recently coined by a journalist, Robert Armstrong at the FT, who must be feeling pretty pleased with himself, as he's found the way to explain why the market's been so resilient, relaxed even, in the face of these tariff announcements. So, for example, after Liberation Day, when there was a lot of shock, I think, at the extent and breadth of the tariffs, markets recovered fairly quickly. As the administration announced reversals or delays of a lot of tariff measures. One of the most notable, the US and China announced an agreement to significantly reduce tariffs temporarily while they keep talking, but certainly by more than people expected. And closer to home, the proposals for tariffs of 50% on the EU also delayed quite quickly.
Right, so whilst we have seen some more recent tariffs on things like steel, there's been quite a lot of retreat on tariffs in general. So could you tell us a bit about how this is impacting markets?
Well, as that pattern of threats followed by retreats became somewhat normalized, it's, I guess, become a source of reassurance to investors that the administration seems still to care about market growth and market stability over and above the protectionist beliefs. And so we've seen a drop in the volatility of the stock market and a rise in prices globally.
Right, and I guess linked to that theme of tariffs, like everything here, is we start seeing more fundamental data releases about how the economy and companies within it are coping in this new tariff world. So could you tell us a bit more about that?
Well, we did see the report for GDP in the US in Q1 actually showing a small contraction. It's only 0.2% smaller, but the first contraction since 2022. The thing is, it wasn't really a great guide to activity. I mean, it was actually because of a surge in imports as people tried to stock up out of the tariff announcement. So see if you can get your head around that. More broadly speaking, though, economic data has been pretty solid. So if you look at the US jobs report in April, a gain of 177,000 jobs, well above forecasts. And then if you turn to the corporate side, company earnings have been broadly speaking ahead of expectations, particularly in tech. So Nvidia, for example, reported that its revenue from data centers is up 73% year on year. And also Microsoft and Meta, decent results. So if you put that into the context of the timing of market returns, so that reporting from Q1 really started in mid-April and ran through to the end of May, and I think a really important support for the markets. Results were closely watched, hotly anticipated, but generally provided some relief.
So if we move on to the third and final theme, we've heard quite a lot about Trump's one big beautiful budget, but it seemed to spark some concerns for investors. So could you tell us a bit about why this happened?
Well, the backdrop to the discussions about the US budget are record government debt levels in a number of economies. And while the proposed budget outlines some big cuts to non-defense spending like welfare, but also reduced support for climate and environmental programs, but it's all in service of renewing some really quite big cuts to corporate and income taxes. Now, of course, the objective is to provide a fiscal boost to the economy, but there are some risks here that borrowing costs could become a problem for financial sustainability. So we saw Moody's downgrading its US government credit rating this reason, and this is a reason for investors to question whether US Treasuries are still the safe haven asset. We've also still got quite sticky global interest rates. Central banks are still wary of inflation risks. And so you put these concerns together, and what it translated to was longer dated US government bonds falling in price during the month, which is the first month this year that they've lost ground.
Thanks, Sunil, and that all makes a lot of sense. And to summarize, it seems like May continues to be another action-packed month for markets this year. Now, as always, I'll end this month-end episode with our stat of the month. So the Conference Board, which produces a measure of CEO confidence for US companies, fell by 26 points in Q2, and that's its biggest ever drop since it started in 1976. The current level is around 34 points, which is the lowest level since Q4 22. And around 50 points is the neutral mark. So it's clearly company caution is a topic worth keeping an eye on. Thanks all for watching, and join us again next week where we'll be discussing another topic that's caught our interest.